Valdespar, Despard Analytics here with Joe Harker, KBG Investments.
I get that a lot.
Yeah, we're both based in Inlet Beach. I guess would you say Inlet? How would you call this sub? Where we are, Florida Panhandle.
So my address, the temporary address I'm in now is Inlet Beach, which is, I think part of unincorporated Santa Rosa Beach as well. So it's all confusing, the different markets here.
Yeah,
The different beach towns are all have their own little names and own little post offices, city halls, if you will. But
yeah,
overall, we're Santa Rosa Beach, South Walton. We're not a city, so South Walton County,
yeah,
a beautiful place
um,
to live and work.
yeah, definitely. Um, yeah, we got to keep promoting it. Although we don't want too many people moving here, but
Unfortunately,
uh,
the secret's out. So
secrets out. Yeah, yeah,
good for business, but on a personal level, what brought us here was, kind of laid back beach life and looking to, settle and slow down. And for me, the opposite's happened. And post COVID, it's gotten really busy, but definitely good for business. So I can't complain too much.
yeah,
It's trying to
yeah.
spend
Close.
summers a little bit further north, away from the tourist beach crowds.
Yeah, yeah. All right, could you provide kind of a brief recap of your career so far, like how you got into real estate, what led you to kind of where you are now? I know we got to meet each other, 10 or 15 years ago. I think it's been a
Probably
while.
probably closer to 15 or
Yeah,
15 years ago. Yeah, yeah.
yeah,
So, well, yeah, so what led me into real estate? I think I from a very early age I knew I wanted to get into real estate, and I think that the two influences for me there were. Um, I heard that like Dale Carnegie quote that said 90% of all millionaires become through owning real estate. So that always resonated with me. And the other thing was, I had some family members that weren't in real estate as a business, but they took their earnings from their business or their job or whatever, and they were investing in real estate and doing well. So I got to see that firsthand, and those were kind of the two influences that eventually led me down this career path.
got it. Yeah, that makes sense. And where was your first? So where'd you go undergrad, and then kind of what was your first job?
Uh, Went to undergrad at Florida State University. I graduated in August 2001, right before 9/11. So as you can imagine, it was a little bit difficult time to get a job. So I just took some odd jobs that really had nothing to do with my degree for probably about 6 months, and then ended up getting a job at a construction company, or a material supply company, working in kind of like inventory accounting, which was not where I wanted to be. So I quickly got out of that. And then my first real estate job, and I'll try and keep this brief. I've been in real estate for 2 decades, so it's kind of detailed, but quickly, I started working with a tax credit developer. Um, I did that for a few years, and then I went over to a company called iStar Financial, um, which is a publicly traded REIT based out of New York. They had an Atlanta offices, which is where I worked. That's where you and I first met 15 plus years ago, when you were a leasing broker for Transwestern, and we had an office building in Atlanta that I think you guys were working on. Um, but I was at iStar for 10 years, and I got a great education there. At iStar, I touched just about every single real estate asset class. I managed about $1 billion of real estate at its peak. So great experience. But being entrepreneurial, I was always doing my own deals while, even while working a full-time job. So I started doing some fix and flip single family homes, in like 2010, 2011. And then 2013, I stumbled across my first multifamily deal, which was a 10 unit deal in Atlanta. And I was able to put that together with my own funds and a hard money loan. So I closed on that. This was March of 2013. A few months later, I closed on a 16 unit deal in that same market down the street from it, actually, with the same seller. Um, and One of my best friends from growing up, I known him from the sixth grade. We played football together. He was in town. I was telling him what I was doing with the 10 unit deal that I just closed on, and he wanted to invest. So he was my first investor. From there, I scaled, 48 units, 80 units, 116 units. In 2016, I had enough units under management and enough momentum behind me with capital that I was able to quit my job at iStar and do it full time. Um, and so I scaled to about 3,000 multifamily units over the years. I had in-house property management, um, and that was going well. And 2018 is kind of when I started liquidating for various reasons. Between 2018 and 2019, I sold about like two-thirds of my portfolio, which allowed me to move my family back down to Florida. Both my wife and I were from Florida originally, South Florida, but Florida, and it's somewhere we always wanted to be back to. And then as I liquidated a good chunk of the portfolio in those 2 years, it gave us the opportunity to get down here to the Panhandle, Florida, and where I've been very active in development and building luxury single family homes.
Yeah, great. Yes. Yes. Can you dive into what you're doing now with the luxury homes and kind of what led you to that? Is opportunity driven in this market? Um, how's that going? What are you seeing in terms of trends and then all the above?
Yeah, so I do some self storage as well. I do that for more passive and long term wealth creation. But the day to day, the focus and the passion is definitely um, on the luxury home building here in the Panhandle. I think what drives that is for me is a creativity that comes out of that business. In my multifamily business, I probably renovated about 2,000 units. And they all look the same, whether it was in Atlanta, Georgia, or Tupelo, Mississippi.
Yeah.
I think we built about. Go ahead.
No, yeah, I was just laughing. I remember you telling me about about this, how every unit has the same cabinets and same look, no matter where
Same
it is.
flooring, same agreeable gray paint on the walls. They all really look the same, and it just became mundane. With home building, I've built or in the process of building about 20 houses now, and every one of them is completely different. From the architectural to interior design to furnishing. If it's a home that we're going to stage, it's just all different. It allowed me to exercise that creative side of my brain, and I thoroughly enjoy that. And it helps that it's been financially rewarding as well, for sure.
Yeah. Um, and then what would you say, I guess, the trends in this market or even broader, like North Florida, Panhandle, Florida, Southeast, what trends are you seeing, I guess, in the luxury homes? I mean, cost of construction, obviously prices nationally seem to keep going up for homes. Borrowing costs seem to be going up. And what are you seeing kind of in your world?
Yeah, I think borrowing costs are definitely coming down. I seen them recently peak around 13% for ground up single family construction. When I first started building down here about 5 years ago, I was at 8.25. I think it was the lowest rate the lowest rate deal that I did, 8.25. So we're kind of close that gap. I'm seeing them at the high single digit to low double digit. I just recently closed something at like 10. It was right around 10.9. So definitely coming down. Leverage has been pretty consistent. Leverage is conservative. Um, in the 70 to 75% loan to cost. uh, 60 to 65% loan to value. Um, so I think we're starting to see those come down. Um, Pricing, it's really not. We've not experienced a downward shift in pricing here. It's minimal. You see some price adjustments when things aren't moving, and then when they get priced right, they're moving pretty quickly. So it's starting to see. There's a lot of it's a very interesting market here. You've got some interesting supply demand uh, imbalances. You've got limited supply, being that we're on an island with the Gulf to our south, the Bay to our north. We have 25,000 acres of state forest. We have wetlands. We're in between two military bases, so we got all kinds of development and height restrictions. So it creates scarcity of supply. It's just a high barrier to entry, and then you couple that with a lot of demand for our real estate, especially as it's Florida. Florida been growing for a long time. Retirees, they come here. The weather, the fact that we don't have state income tax. There's a lot of things that drive Florida. But historically, that was down south. The retirees were going to Naples or the villages, and um, the word has really gotten out on our market, which was once dubbed the Forgotten Coast. Is It's not forgotten anymore. So you're starting to see people that hadn't heard of our market, 1, 2, 3 years ago. That word's getting out. They're telling their friends, and people are starting to come here in droves. And we're seeing that, initially from tourism, and then that drives people to move here. So we're seeing a lot of growth here. Um, and then you follow the smart money, right? You see what St. Joe Company, publicly traded company, one of the largest landowners in Florida. You look at their 50-year master plan for this area, and then other home builders that are very bullish in this market. They're either expanding their footprint, or if they're not here, they're trying to get a foothold here. So we've got some larger developments where we just take through the entitlement process, and then sell to those national home builders, and we're seeing a lot of competing for the same product. So that's very encouraging.
Yeah. Are you, when you build the homes, are you looking for individual lots, or is the ultimate buyer of the home choosing the lot? I mean, how do you do that? Are you building on spec or partial spec?
We always start off with spec.
Yeah.
We've sold 3 homes pre-construction, and for the most part, that goes well. It's definitely the first one we did. We actually sold it. This was in a much different market, where things were selling in a day, but we listed it while it was still land based on the plans and renderings, and it competitively went under contract. And that buyer was the easiest buyer ever. Didn't have any changes um, to our design, so that one went really well. These last two have become more semi-custom. They're higher dollar value homes, so naturally, they're making some changes to suit their taste. And for the most part, that's gone well. We've going through change orders, which get passed on to the buyer because it's them wanting to change things or add things. And so with that, comes additional time. And while our contracts say, any buyer related delay is going to be at their dime, it's really hard to quantify that. So I would
Yeah.
say, added 2 to 3 months to our completion time. But to sell something, that's 50% complete, and get a 10 to 20% hard deposit and de-risk our investment, it's worth that extra time, and the extra hassle of having an extra layer of uh, people to communicate and make happy, and appease. Um, so yeah, we're a spec home builder, but we've done some now semi-custom.
Will you raise money for those individual back home or like to buy a lot, you start building. Is there investor like? Uh, could you walk me through kind of what you're raising equity money for? What you're looking for in terms of like if you were to look for investors or talk to investors, sit down with an investor, what would you kind of present to him in terms of your various strategies?
Yeah, so the way we work is we identify a deal, piece of land, and we go through our due diligence process. Once those things start checking out, we're building in like kind of mostly established neighborhoods, so there's a development order in place for the neighborhood. So we know we're not going to get denied, but there's some things we have to look at, like wetlands. If there's wetlands on the site, that's a very long mitigation process. Or if there are wetlands on the site, which we're looking at, we're under contract on a lot now, which we found some wetlands, but we figured out a way to avoid it. Um, and so there's no impact there. But we kind of go through that process, start through the design process, engineering process, all the due diligence, and then get into permitting before we start raising capital. And the reason being is, that development process, like all those soft costs that we're spending, is typically about a 6 months process before we're ready to um, going for permitting. And so if we raise capital on the front end, we're burning through time. So, one of our advantages as a sponsor syndicator to other investment classes like multifamily is our timeline. Whereas, multifamily or self-storage or other asset class, typically your 3, 5, 7 year hold periods. One of our strategic advantages is our timelines, which are generally less than 24 months. And one of the reasons we're able to do that is because we go through that process and oftentimes close on the land before we start raising capital. So it shortens our hold period by a good 6 months.
Yeah, cool. How can people get in touch with you?
Easily on our website, kbgrealestateinvestments.com. So that's K as in kite, B as in George, or B as in boy, G as in George, realtyinvestments.com.
Nice. Great. Well, yeah, thanks for your time.
Yeah,
Um,
good to
yeah, I
see
really
you.
enjoyed.
Yeah, let's grab another coffee at Carillon in the near future.
Yeah, sounds good.
All
All
right.
right, thanks.
Thanks for your time, Al. See
All
you.
right,
Bye.
thank you. All right, see you.